The stock market is about to move big this week. Ladies and gentlemen, welcome back to the channel. We're going to go over all of your news you need to know today, what Trump is saying, what Europe is saying, all of that good stuff. But really, what we need to focus on in today's episode is the economic data of this week. As you have realized, markets are not open for trading today. So there's only 4 days of this week, and every single day, you have something big from a data perspective coming out. We also have some earnings as well. Keep in mind, today is September 1st. Tomorrow is September 2nd. It is the worst month, September that is, out of the entire year for over 50 years now. September is not great. And, well, that's going to make things a little weird in this upcoming week. We'll get into all of this in today's episode. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. If you want to come find small cap AI stocks before Wall Street does and come get involved with the action alongside us, that is your way to do so. But without any further ado, let's get into today's episode. Now, in the news today, the U.S. has suspended visa approvals for nearly all holders of Palestinian passports. U.S. Treasury Secretary Bessent says that Trump may declare a national housing emergency this fall to address rising prices and dwindling supply. And Brazil calls a virtual BRICS meeting on September 8th to talk about U.S. tariffs. Trump on India's tariff cut offer says they should have done so years ago. And Trump on India's tariff cut offer says it's getting late. Trump says that India offered to cut their tariffs to nothing. Oil traders expect OPEC Plus to hold output flat at the weekend meeting. And for anyone that cares about this, Trump's World Liberty financial tokens have begun trading. Donald Trump says that drug companies must justify success of their COVID drugs. Trump says Pfizer and others must show proof of COVID drug success. Trump suggests anti-crime work in Chicago, New York City, LA, and Baltimore. ECB's Lagarde says U.S. court challenge to Trump's tariffs has added another level of uncertainty. And this is what we talked about over this weekend. Like, you know, there could be the positive impact of not having as many tariffs from the courts, right? With not as much inflation, maybe better earnings could come about from that. More rate cuts, but it does raise uncertainty about, you know, where things will stand. And uncertainty in and of itself is negative for markets. ECB's Lagarde says the equilibrium of the U.S. economy would be impacted if Trump removes the head of the Fed, and this would be very serious for the world economy. Now, this is going to be a big week. In part, you do have some important earnings, but a ton of very important economic data, and we'll get into that in just a moment. But on Tuesday or tomorrow, you have NEO that reports pre-market, Zscaler in after hours, Wednesday pre-market, Dollar Tree, Macy's, Campbell's, Polestar, Sprinkler, and some others. Wednesday and after hours, Salesforce, C3 AI, American Eagle, GitLab, Hewlett Packard Enterprise, PagerDuty, Asana, Figma, and ChargePoint. Thursday pre-market, you have 1800 Flowers, Shoe Carnival, Toro. And then Thursday and after hours, Broadcom, Lululemon, DocuSign, UiPath, Samsara, Braze, Smith & Wesson. And Friday, pre-market, you have ABM. So some of these could be mildly important: Zscaler, Dollar Tree, Macy's, Salesforce, Broadcom, Lulu, DocuSign, okay? And specific sectors are going to move. Like Zscaler is likely going to move cybersecurity stocks. Salesforce could obviously move more of your software names alongside DocuSign. Lululemon could move, again, some of your, retailers along with American Eagle, and Broadcom more important for the AI trade. But really the main story of this week is going to be economic data. And since it is a short week and we do have a bunch of data, basically every day is going to be important. Starting off tomorrow, You have ISM manufacturing PMIs. You will have the U.S. global manufacturing PMI final numbers for August. You're expecting that these numbers will come in better. So manufacturing is expected to get better. Manufacturing PMIs last month were 48.0. You're expecting 48.6. So a little bit better, not great, but definitely improving. Construction spending month over month expected to be positive, up 0.2%. Last month it was negative 0.4%. New orders expected to rise as well. Manufacturing prices, as per usual, expected to rise. The RCM TIPP Economic Optimism Index is expected to rise as well from 50.9 to 51.8. So that is your day on Tuesday. Okay, you will also get total vehicle sales for August. Last month was 16.4 million. So we'll see where that number comes in. On Wednesday, you get JOLTS job openings. I've explained this before, and the best way to think about this is the more job openings you have, the better the economy, right? If companies are looking to hire a bunch of people, then that's a sign the economy is doing okay. The labor market is doing okay. If you see a sudden drop in job openings, that's not going to be a good thing. Last month, I mean, we dropped like 250,000 job openings, and that was quite a drop, but you're expecting a little bit of a rebound here from 7.437 million to 7.5 million. If we come in low on Wednesday, it's going to further validate the Fed needing to cut rates. But in September, again, seasonal weakness, it could prompt a little bit of nervousness around the economy, around the labor market, and what direction we're heading in, thus could be seen as a negative for markets. You're currently pricing in an 88.9% chance of a cut September 17th, an 11.1% chance of no cut. October 29th, you're pricing in a 47.6% chance of 2 cuts, but you're also pricing in a 47.2% chance of 3 cuts by October. Okay, and the economic data this week is really going to drive these odds a lot. Now, for December 10th, the Wall Street is favoring, well, not completely pricing, but favoring for 3 cuts with 47.5% probabilities. 4 cuts is priced at 35.9%. That would be a 50 basis point rate cut at one of the Fed meetings. Okay, so it's not priced in, but you're kind of pricing in a decent chance of 4 cuts by the end of this year. Now, on Wednesday, you will also get the Fed Beige Book at 2 p.m. That's very important to read. It doesn't necessarily move the markets too much, but it's basically like the blueprint of how the Fed is thinking about the economy. Okay, it's basically a report from all of the different Fed districts and how their districts are doing. Okay, Jerome Powell himself has said, hey, if you want to understand like how the Fed is thinking about the economy and what the Fed is seeing, just watch or read the Fed Beige Book. And, well, I always do, and it gives you a little bit of a heads up. So stay tuned to the channel. We'll definitely be covering that on Wednesday. On Thursday, you have Challenger job cuts. This, again, doesn't exactly move the markets a lot, but it is very important. Challenger job cuts are basically planned layoffs. So last month you were at 62,000. We're expecting 89,000. Challenger job cuts peaked in March, right? Like right as the tariffs, were about to go into effect. Okay. You've seen a big rise in February as well, 172,000. You peaked in March at 275,000. Like you dropped off a lot, so that's a good sign. But that was a pretty worrying, couple of months there. Okay, so a big rise would not be good. You will get the balance of trade for July. Again, the deficit that feeds into GDP. As we talked about on Friday, I actually think stocks should have been green on Friday. The GDP estimate went from 2.2% to 3.5%, partially because of a higher deficit. Okay, but partially and mostly because of these metrics. The third quarter real personal consumption expenditures growth went from 2.2% to 2.3%. That's good. But real gross private domestic investment growth increased from 4.4% to 6.1%. So while there's a lot of noisy economic data, these are really good indicators to show how is the economy actually doing? Like, how are businesses doing? Are they investing? Are they going to create more jobs? How are consumers doing with real personal consumption expenditures growth? We are in deep positive territory for both of these, specifically real gross private domestic investment growth at 6.1%. Yeah, that should have been the main headline on Friday. Was it? No. But again, that's why you got to kind of be stoic over the next 30 days or so, because what happens in markets and how stocks react to news may not make a lot of sense, okay? So you got to be able to see through it and not get so emotional. Now, initial jobless claims will be coming out on Thursday as well, expecting 232,000. Last week was 229,000. That one's pretty straightforward. Wall Street actually pays attention to it. If you come in higher, that's bad. If you come in lower, that's good. We're still at a kind of elevated level in the 200 plus thousand arena. But once you get like above 250,000, 260,000, that's when Wall Street starts to worry more about the labor market. Now, on Thursday, you will also get ISM services PMIs, arguably more important than the manufacturing because services make up most of the economy. For the headline number, you're expecting 50.5. Last month was 50.1, so you're expecting things to get a little bit better. Business activity expected to fall a little bit from 52.6 to 52. Employment expected to stay around where it was before, but to fall just a little bit. New orders expected to fall a little bit as well, and prices are expected to rise a little bit, okay? So you're not pricing in anything too crazy for that. If we do get an upside or downside surprise, that will move markets. You got a bunch of Fed speakers as well throughout this week. I know I haven't been highlighting them, but based on how the data comes out, Fed Williams will speak. Fed Goolsbee will speak. It does seem like, though, at this point, the Fed is mainly team rate cuts. Jerome Powell really created the pivot point for the Fed in his speech 2 weeks ago. Okay. Now, September 5th, my sister's birthday, but also non-farm payrolls day. Non-farm payrolls for August are expected at 78,000. The last, May and June were not good, the revisions. We'll see what happens to the prior month as well. Does that get revised lower? Do we potentially get revised lower and be negative for any of the last, 2-3 months? That would be a concern. Now, again, for August, 78,000 jobs with the kind of revisions we've been seeing could very well turn that negative, with revisions. So if that comes in higher, that's a good thing. Okay. If it comes in low, yes, you're going to justify rate cuts and maybe that 50 basis point rate cut as soon as September, but it's not going to be good for markets to see the labor market getting worse. Now, here's the fact of the matter, though, and this is what I need you guys to understand. Like, even back in why do you think we used to go through a lot of recessions? Like, from 1880 through 1990, we went through a lot of recessions in this country. Why do you think since, call it 1990, we go through less recessions? Why? Why do you think that is? Okay, couple reasons. Number one, there's less panic. There's more confidence, okay, that things will be okay. Having a central bank helps. Having the central bank tried and tested to be there as a backstop for the economy is part of it, okay? Wall Street knows if things get too bad, the Fed is there. Okay. There's confidence. Like back in the early 1900s, before there was a central bank, the littlest shit would cause like 7-year slumps in the economy because people would all lose confidence. They would say, to hell with this. We're going to save our money. We're going to, really hunker down. That doesn't really happen anymore. The economy doesn't sway anymore. People are just how they are. Nobody really thinks about, oh, could my bank fail? Could everyone just lose their jobs next month? How safe is my job? Like, people don't think like that anymore. Okay. Also, the economy is way more diversified than it was before. Back in the day, it was mostly manufacturing. Today, it's services. Okay. The web of this economy is deeply intertwined. Okay. Whether it's, you pay your phone bill that goes to, let's say T-Mobile or Verizon, and they pay their people to work on the tower lines, and the tower lines are supplied by XYZ company that employs XYZ amount of employees, right? You're very much intertwined. Or you go to a restaurant, you tip your server pays their bills. Like, the landlord gets paid rent and the landlord pays his rent. Like, we're so much more intertwined today than ever before. And it's a big ship. It takes a lot to drive this economy into a recession. I'm making this point because let's say we do get a jobs report that is 20,000 jobs on Friday. If the markets react negatively to that and want to go through a growth scare, that's fine. I'm not gonna beat the markets up for that. That's logical. But when you actually understand the economy, you shouldn't be nervous about that to the same extent, because you need a catalyst. You need something to alter people's perceptions. You need panic. You need some kind of fear. You need, like, not from a Wall Street perspective, but from an economics perspective. So when we look out there in the economy, not too much has actually changed. It seems pretty status quo over the past couple of years. Like, you don't have people all of a sudden getting frugal, right? On a mass extent. People are spending money. They're working. Okay. So the economic data we get is not very good. Wall Street gives it credit, right? It assumes that it's pretty accurate, but it's not. Okay. If we get 20,000 jobs and the markets sell off 2 to 3%, which wouldn't be surprised if that happens via seasonals again, does it mean we're going into a recession? No, absolutely not. Would that be a buying opportunity? Absolutely. Because when you understand how the economy actually works, these things don't faze you. Now, if JP Morgan were to go bankrupt, yeah, then we have a big problem. Or Bank of America or whatever, if there were like an actual massive issue, right? That's when you really shake confidence. That is a catalyst to give you a recession. But if Trump's tariffs and the tariff embargo on China wasn't a catalyst to give us a recession, I don't think anything else is going to be. Okay, let's just put it that way. Now, the unemployment rate is expected to rise from 4.2% to 4.3%. Now, again, I'm assuming the numbers could come in low, but Trump did also fire the head of the BLS, and they probably want to put out a pretty good jobs report. So I wouldn't be shocked if you come in over 100,000 and markets, it's weird. Like, the seasonal weakness period is weird because over 100,000 jobs, you would expect that to be seen as positive. But it's going to lower the odds, presumably, of rate cuts, so that could be seen as a negative. If you come in really low, that's almost guaranteed to be seen as a negative. So there may not be like a positive scenario here. Maybe the best case scenario could be like 100,000 jobs, less than 120,000 jobs. So it still justifies rate cuts, but not strong enough to derail the rate cut thesis. And the economy is doing okay, or the labor market's doing okay. So it's really hard to say, how Wall Street's going to react to this. And we'll see. If we sell off heading into Friday, maybe we rally on Friday. no matter what the number is. If we rally into Friday, maybe we sell off on Friday. So that's kind of the way that I'm looking at it. But again, why I really have talked about being stoic here a lot over the past weekend is because it doesn't matter where the numbers come in. Once the seasonals change in October and November and December and get really strong again, it's a totally different setup. And stocks will revert back, in my view, to the raging bull market that we are still in. Now, you will get average hourly earnings month over month and year over year, government payrolls, manufacturing payrolls, non-farm payrolls, private, and again, average weekly hours. So participation rate will be important. You're actually expecting that to fall from 62.2 to 62.1, which it's been on a downward trend for a while now. So we'll see what happens with the economic data. Let me know how you guys are viewing this market with all of the catalyst to really start off the worst month of the year. So let me know your thoughts on all of this down below in the comment section, ladies and gentlemen. I will tell you as the last thing to end off this video, you want to be stoic. I don't give a rat's ass what happens in September, as long as we don't have anything that's like actually bad. Like, I don't even care if the jobs report comes in bad. Like, does that mean we're going into recession? No. Even if Wall Street starts to jump towards, recession or growth scare, like, no, this shit doesn't matter. Okay. I mean, to be honest, the jobs report's probably going to come in strong because Trump fired the head of the BLS and blah, blah, blah. Okay. But we'll see. There is this negative bias for September. And if it is a bad week this week or next week or throughout this month, it just doesn't matter. As long as nothing bad happens on trade, like we just got done with earnings season that smashed expectations. Look at the, real gross private domestic investment growth. You get what I'm saying. From the GDP report that we talked about in this video, 6.1%. Personal consumption expenditures growth up 2.3%. Like, we're doing fine. September doesn't matter. October, November, December, that's where the rally really kicks off into 2026. So if we do get some weakness in September, as long as you're not, a panic boy, you'll be fine. Okay? And that's going to be an opportunity heading into what I view as a very strong next 12 months or so. Could be quite euphoric. The last thing you want to do is panic out right before the end or the start of what could be a very strong run for markets. So hit that like button and subscribe to the channel. Again, check out that link down below in the description of this video for the trading community if you would like to come join us. But with that said, have a great rest of your day, and I will see you in the next one.